Hey, and welcome to Tax Tuesday. We're in February of 2025, and I am Heather Ryan, the owner of Tax Queen, a firm helping digital nomads and RVers with tax questions, tax strategy, general business, and tax help. And I do these monthly Tax Tuesday Live to answer questions submitted by you, the general public. These are not always client questions. These just come from my email list, anybody who wants to. So if you're watching this and yeah, that's that's it. I do have a few questions that were submitted. I was actually a little surprised. I thought since we're in tax season that I would have more questions to share, but I'm happy. I'm going to answer them. Actually, one is like a four-part question. So yeah, would, I'm going to get started. I do see someone who's here already, so welcome and asking questions. So if you are here live, feel free to jump in. I take live questions after I have answered the questions of submitted previous to today. If you see me looking the other way, it's because I have the questions on a separate screen. So don't think that I'm ignoring you. And so the first question is advice on how to into transfer into new business account from my personal savings. So I'm going to just go through one at a time. So advice on how to transfer money into a new business account. There is no advice. You transfer the money. It's an owner contribution depending on, the type of business you are. If you're sole proprietor or partnership, it's a partner or an owner contribution. If you're a C Corp, it's a capital call or capital contribution. So yeah, there's no advice to be given. Just do it. That's my advice. Any recommendations on a small business accountant for us out on the road and domiciled in Florida? So me, not to brag or whatever, but I do help digital nomads, RVers, whatever that situation be. It doesn't matter where you're domiciled. I'm an enrolled agent, which means that my licensing is with the IRS and I can help taxpayers in all 50 states. So it doesn't matter, states. And especially doesn't matter Florida because there's no state income tax. So there's no filing. Makes life a little simpler for you. And so yeah, that's that suggestion. We have startup costs associated with our business prior to opening the checking account. We established it on in December. However, we had to pay startup costs earlier to the company establishing everything for us. Can we write these off for 24 on our business taxes? We established a basic LLC. So this question is complicated. There's a couple of things here. So I hear we established a basic LLC. So I want to go on. I've answered this question many times, but I still get it. I still get the confusion around it. An LLC is a legal entity with the state, not a taxable one, right? So taxable entities, sole proprietor, partnership, S Corp, C Corp. Those are what the IRS and even some in states see as taxable entities, right? So LLC is a legal entity. When I see the word we established, that implies that there's multiple people, right? So if there's multiple people in an LLC, your default is partnership. That's what you are for tax purposes. This is true even for a husband and wife, or just I call them spouses because there's many different ways of being a spouse nowadays. So if you have two spouses being a part of an LLC, you have a partnership. Partnership tax return is due March 15th. That's a surprise to many people. But to answer this question, if you had expenses, right? So the end in December, the end of the year, you started this company, you paid some money to get that going, you don't have any income, right? So generally speaking, those are startup costs. Startup costs are limited to $5,000. After that, you amortize them. Amortizing means you just deduct it over 15 years. This is tax law. So generally, when I hear that situation, I like to say don't take the expenses in 24, wait until 25 when you have income, and then take those expenses as startup expenses in 25 against the income. And it's actually going to help you more in 25 if the business is successful and you have income to have more expenses. So that's generally what I like to see. Um, and that hopefully answers that question. It kind of, again, it's a little more complicated. It isn't just as black and white as, right? I don't have all the information. I see people asking more questions live, and I will get to you. But I'm going to answer all the ones that I had submitted prior to today first. So I do see them. Thank you for joining in, and thank you for sharing and asking questions. So I hope that is, yeah, hope that answers that. And then any advice on an S Corp? We are trying to keep it simple, but want to have the most deductions as possible. So I rarely, pretty much never, again, there's exceptions to everything, but pretty much never suggest an S corp from the beginning. And again, a little bit of confusion. An S corp is a tax election. So remember I said LLC, right, is a legal entity. So our taxable things are sole proprietor, so single member, right, one person doing business. LLC, or sorry, partnership, so multiple people doing business together. Um, and we have a corporation. So corporation can be C Corp, right? Or S Corp. S Corp is simply a tax election. And I rarely see it beneficial right out of the beginning, right? From the start. There's exceptions, if the business has a lot of things lined up, if it starts really in gangbusters. S Corp is really about tax savings when you start to hit 75,000 or so of net profit. So I don't really see the benefits prior to that. I hope that answered all those questions. And yeah, that's question one. It was actually four parts, but I wanted to get to all of them separately and keep things simple. And hopefully my answers were generally helpful. The second question I got, as a 1099 worker, is there a way to estimate payments throughout the year so I lessen my tax burden at tax time? So yes. Let's just say that the IRS and the US has a pay as you earn tax system, right? We do this when we're a W-2 employee. We automatically do this because as we're getting our salary and our pay, our employer is withholding taxes and remitting that to the government, right, for us. So we're paying taxes as we earn. When we're self-employed, we still have to pay taxes as we earn them. So keep that in mind. We have self-employment taxes, which is 15.3%. That's your Social Security and your Medicare tax. And that's easy, right? So your net profit, so you have revenue or income at the top, you have your expenses, and then you pay self-employment tax on that difference. So we call it our net income. So that's easy, right? Calculate 15.3%, but you also have to factor in any income tax that you might be having on that money as well. And so normally I like to say put aside 25 to 30% of everything you make and put it aside in an account in wherever, savings account, doesn't matter, and pay our quarterly taxes. So this is, if you've ever heard anyone talk about quarterly estimated taxes, that's exactly what it is. You're paying into the system as you're earning your money. So we're paying quarterly. Our first one is due April 15th. Yes, that's a double whammy if you're self-employed. But April 15th, June 15th, September 15th, and then January 15th is that final fourth quarter payment because you closed out the year, December 31st, and so we pay. So that's how we keep up with our taxes. We avoid that tax burden. I like to call it a tax surprise. But in general, that's kind of how, and I will share this link as well. That helps you kind of a guide to self-employment taxes, estimating. And generally, I work with my clients on a one-to-one, individual basis to kind of guide them throughout the year and give them estimated payments and update them. So if your business is growing and doing really well, we might need to update those payments. If you have a bad year, it happens, and we are reducing our income, and then we can lessen those payments. So we'll just keep that in mind. But generally 25 to 30%. If you have a state tax, that might be higher, that might have to put 35% aside, but just keep that in mind, that we owe self-employment taxes and then income taxes, whether it's federal and if you have a state. So, All right. So I see lots of questions coming in. I like it. Um, yeah, but I'm gonna get to them. I promise I will get to them after. I have one more question to answer that got submitted ahead of time, and then I will get to your live questions or even some comments. Um, so number three that I got was we closed our business at the end of 2023, and we did not have any business income in 24. On our 23 taxes, we qualified for business loss carryover. Can we claim that loss in 24, even though we didn't do any business? So the answer is yes. The IRS allows for we call a net operating loss, NOL, and you are allowed to carry that forward and take it. Um, so so yes, you're in luck. You get to take that loss in 24 on your taxes. So awesome. Okay, that gets me through what I got submitted. I'm going to go ahead, give me a second. I'm going to read just from the top. First question asked. Looking to understand what we need to prep for and track in 25. So that's a very open-ended question. It depends, are you a business owner? Are you traveling outside the US? It can really vary. So if you're still online, feel free to kind of give maybe some clarifying answers to that because business owners should always track business expenses and business income. That can include mileage if you're driving at all for business. Yeah, so if you're not a business owner, what else are you tracking? I mean, it depends. Like, well, yeah, what's your deal? What's your story? I need more information really to clarify that. All right. Did any other taxpayers have a hiccup yesterday paying estimated taxes? It was the postponed date for those affected by hurricanes. Oh, I cannot answer that question. If there was a hiccup paying taxes, estimated payments, I cannot answer that. I Obviously, we know, all aware that our government is making changes with the new administration. It could be affecting systems. I do not know the answer to that. I have not heard anything about that. That is not, yeah, sorry. I wish I had a better answer for you. I'm trying to fill out an 8832 because the company that I paid to do my LC and all made mistakes. I'm correcting them with the SBDA in Florida. I'm establishing a sole proprietor. Okay. Um, what is the question there? 8832 is usually election to be treated as a corporation, so I'm not sure why would we be filling out an 8832. Let me see if there's another. The company put me in a partnership with my husband. I'm in front of the form online and trying to figure out how to fill out to change the address and change of entity to disregarded. Okay, so here's the problem. I can tell you, this is the person maybe if you the company actually didn't do it wrong. If you created an LLC with your husband, so husband and wife, LLC is a partnership and they filed that correctly. You cannot be a disregarded entity if you have an LLC with more than one person. You are automatically a partnership. There is no disregarded entity. The only way to do that is to go back to the Secretary of State, remove a member from the LLC. So only one of you is a member. So husband or wife, pick your choice, doesn't matter. Is the owner, and then yeah, that would solve that problem. So it's really the Secretary of State that you would go to, whatever that state is, and removing a member. And then honestly, I would probably just go get a brand. I'm trying to see what else. There's a lot of things in here, so give me a second to read this. I'm in front of the form line trying to figure out how to fill it out and change my address. And change. I haven't, let me pull up the 8832 so I can help you better on that. Because I've used it, but I don't have it off the top of my head. So you want to basically do an initial classification. Um, so question 3, does the eligibility entity have more than one owner? So no. And that's, yeah. So the name of owner would be the one person, whoever you're choosing to remain on the LLC, and then the identifying number of the owner would be your social security number. Yeah. And then so you would be on 6C. You would be a domestic eligible entity with a single owner electing to be disregarded as a separate entity. Yeah. Um, and sometimes I actually just recommend canceling that other EIN that was formed as the partnership and creating a new one if that's easier and simpler. And that way you can do that online easier if that's helpful. All right. So let me see. Trying to read through this. Can an LLC have domicile in Texas and yet have a primary residence in a state with state income tax? Again, LLC is a legal entity with a state, so I don't understand that question. For example, companies can be legally based in one state like Delaware and have headquarters in another like California. Um, so this is true. You can be a Delaware entity and have headquarters somewhere else. If you have physical headquarters, okay, this person you're saying like Meta, okay, they have physical headquarters, right? They have an office. That means that they're still registered in California. They still have to be a foreign entity. So that doesn't do you any good. That just creates a double work, right? Double the work. You have to maintain two entities. So generally speaking, I like to see, and there's a differentiation here. So in this case, if you have a physical business, like with an office that you go into, you should always be registered in that state. You're going to be required to. That state is going to say you have nexus here, you have ties to this state, you have to register in this state. So if you were registered your company in Delaware, you then have to go to the other company. If you're using California, an example, you go to California and you register as a foreign entity because you're doing business in that state. Does that help that question? I hope that helps answer that. Generally speaking, when I work with RVers, digital nomads, we run remote businesses, so we don't have a nexus necessarily or an office in a state, like a physical building or physical location. So you don't usually have ties in that way to a state, and so you don't have to register as a foreign entity. Um, but yeah, but that's not going to really help because if you have a primary residence in a state income tax state, all of your money flows through to that anyway. So you're going to be paying there. So why not just register wherever your residency? I always, yeah, I'm not, this is, having domicile and residency here is, it's, confusing to me because I'm not really fully understanding the situation. Um, Yeah. Usually, if you're full-time traveling, you wouldn't have a residency in a state. You'd have domicile or residency in the same state. So Texas, if you're going to use Texas, escapees mail service. So I hope that helps answer that. If you're still here, feel free to like maybe give a clarifying thing. Um, so let me see. Sorry, there's lots going on, so I'm trying to read here. This is great. I love it. So keep it coming. The company put me in a partnership. We read through that one. Um, So have international travel as well as North America. So anyone, I think this was tracking things, right? So if you're traveling outside the United States, track your travel. Have a spreadsheet, use an app. I actually just found one that's called Flamingo. That's really cool, and it will track as you're staying outside the United States. And this is really important for tax purposes because there are credits available for those who stay outside the United States. So really, really important to track that travel if you're going to be outside the United States. All right. Is there a reason to run personal expenses through QuickBooks? Or should they always be expensed to personal accounts? Personal should always be personal. Business should always be business. Totally separate, should never intermingle. If you're using QuickBooks or some other kind of accounting software, keep them separate. Never have personal in QuickBooks or whatever accounting software you use. That is my yeah, I say that all the time. Separate entities, business, personal, separate buckets for money. All personal expenses go through personal accounts and personal income comes into personal accounts, business income, Business expenses go through business credit cards or business accounts. So, new small business owner, sole proprietor, do I file? Okay, file quarterly taxes. So there is no filing of quarterly taxes. It's just a payment. And I kind of discussed this a little bit earlier. We pay our quarterly estimated taxes to keep up with our obligations. So if your business is cash flow positive, which we hope it is, then you should be paying into quarterly taxes. On filing annual report, we did that one. Let's see. I'm gonna keep, sorry, I'm reading through this. I'm establishing a bank account. I wasn't sure how much money to move from personal account to the business account. There is no rule of how much money you have. It doesn't make a difference. If the bank says you only need $50, then transfer $50. There's no rule and a hard fast rule around that. It's not tax deduction. There's nothing. It's just a contribution. So it doesn't matter. The question is really establishing a bank account and how much money to move into it. There is no rule around that. Whatever you're comfortable with. Again, if the bank requires $25, then move $25. If you think you're going to need 5,000, then transfer 5,000. And anything in between or more. So yeah. Business insurance for authors. I don't have suggestions of business insurance specifically. There are tons of things out there, things like Hiscox or why am I blanking on it? But there's all kinds of business insurance options. I would research best isn't in, especially if for authors, look for one on that. Flamingo or spreadsheet to track expenses and track all expenses. God. So Flamingo is actually tracking travel. So if you're an international traveler and planning to spend outside the United States, that's what I just recently discovered this. I thought it was pretty cool. I've actually been spending some time traveling outside the United States. So it's pretty, it was fun for me to find out too. If you're been traveling outside the United States, if you know, Europe has the Schengen region, and as American or US citizens, we're only allowed to spend 90 days there. And so it helps you track all of that. And so you can to monitor that, but it'll track anything. Yeah. So Flamingo is great for tracking your travel outside the US. You can use a spreadsheet to track your expenses. You can use bookkeeping software, whatever you'd like. As an LLC, income is passed through, which is wonder why how be affected by having domicile in Texas and a house in Colorado. So it doesn't, that's, I guess what I'm trying to say is it doesn't help you to have the, if you have a residence, right, a house, a home base that you're going to be keeping, and that's in a tax state, you have your business registered there. It doesn't help you to move it to Texas or to Florida or some other income tax free state because the income is on your personal return anyway. So you're going to pay taxes. In this case, you're talking about Colorado, you're going to pay taxes in Colorado. So why not just register it in Colorado? That's my suggestion. I always like to keep it simple. So if we're going to keep our home base, we keep our business and our home, everything else, residency in the same state for simplicity. So that's my suggestion. Personal expenses and QuickBooks. How do you recommend to see things that you'd run through your personal accounts that have tax implications? Charitable contributions. So I would never put that through QuickBooks ever, like ever. No personal accounts. If you're using QuickBooks for business, no personal accounts in there attached at all. But checking like charitable contributions, put a spreadsheet somewhere. Put notes. I mean, it just depends on how you organize your financial life in general. You can have, you can use like Google Drive or something. You can use Dropbox and have a document in there, whether that's a spreadsheet or just like a Word doc type of thing. I always like to just have a folder taxes and then the year. So taxes 2024. And then if I donate $100 to a charitable organization, they should be providing you with a receipt. I take that receipt and I put it in that folder, right? Or in February. So I don't always remember, right? Who remembers what happens 9 months ago, 10 months ago? And if that's the case, I can go back to that folder. So now we're in February of 20, 5 and I'm talking about doing 24 taxes, I go in that folder and I can say, oh, look at that. Here's all my charitable contributions from the year. I can add them up. I can put them in a spreadsheet if I need to add them up, whatever it is, use a calculator. But never put them into QuickBooks. They don't belong there. Again, separation, personal, business, always separate. There's a couple of things there. I've seen businesses donate, right, to charitable contributions. That is okay. If it goes through the business, it's fine. It's still going to flow through you personally. But if it's, yeah, yeah. Hopefully that helps answer that question. Um, let's see. If we wanted to work with you, how do we get in touch or how do we get started and discuss pricing? So there's a contact form on my website, tax-queen.com/contact. And you can just send an email there. That's the best way to get started. I'm taking very limited. I kind of have 24 closed because of my client list is full at the moment. I'm taking very limited openings just because of that. I'm really trying to be aware of my time and being able to give my best to all my clients. So be aware of that. I generally like to see people come to me in the summer or the fall, and we have a discussion and see what your needs are. And then that would get you on my client list. So if you're an employee with US residency but work remotely abroad, is there any tax impact or do taxes just go by your state or domicile? So the taxes, if you are a W-2 employee, the tax obligation is actually through your employer, and your employer is the one that would get in trouble if they found out that you are living abroad. And also depends on how long you're spending in any country. So if you're spending certain amounts of time, right, that's how countries outside the US, even the US, kind of we determine residency for tax purposes based on time spent. So days there, right? Sometimes that's 180, sometimes that's 183. Just depends on the company or country, depends on the state even if we're talking about state time. So generally speaking, it's not going to have a tax impact to you unless you're literally living in another country. If you have a visa to legally live in another country, you probably have tax residency and you might owe some taxes to that country. It just depends. Every country is a little bit different. We all have different tax rules. The US also has a lot of tax treaties with other countries, so we have to be aware of that. So I'd really need to know more of that situation and to guide you better on that. But generally speaking, it's about time spent in a country or a state for taxes owed. I found a template in Google Sheets budget format for tracking personal expenses. Awesome. Yeah, use Google Sheets. Right, great. I like Google Sheets or some other kind of online thing. It's not going to get lost. It's in the cloud. It's saved. It's not on your personal computer. But yeah, I love that suggestion. Just use Google Sheets to track things like charitable contributions. I know that's what we were kind of just talking about. So I love that. I purchased Quicken this past month and I got a business and personal. I've not used it yet. However, they said that I could use it for both. Um, I I do not know Quicken all that well. It is possible to use. I mean, I'm guessing it's possible, especially if they have an option and that it's going to track your personal and your business expenses separate. I'm talking about using like a QuickBooks Online or like a Wave Accounting or any other Zero, things like that. When you have a business account with them and an online bookkeeping software, you never attach personal accounts, like ever. Never add a personal account in their only business. As far as using Quicken, if they have it, make sure that it does keep things separate. So I'm not that familiar with Quicken. I don't use it. So I can really only help or recommend things that I have used personally. I wish I could offer better, but yeah. Let's see. For Nomads, do you need to track time spent in each state and file state returns? So yes, and generally speaking, I do most states, so it's not just time spent. A lot of places, it's actually money earned. How much have you earned in that state? Because they all have limits. So, or like you have to earn over a certain amount in order to file a state tax return there. I don't see too many people actually hitting those limits, but if you're going to spend 4 months, 5 months in a state, you may hit those limits. So yes, I would track time. I always recommend a travel log of some sort. That can be using an app, that can be just a spreadsheet, simple. It's up to you. But thank you for joining. I think, and yeah, let's see. I love all these questions, so thank you for joining me live. I was a little nervous since I didn't have a lot prior to submission, but I love all these live questions. How many days traveling or living outside the US will get us a tax break? We are driving, I can't even pronounce that. Ushuaia? I don't know how to say that. I'm not familiar with that, so I haven't spent more than a month in any country along the way. Um, so living outside the US, you have to have 330 days out of 365 have to be outside the US, which is why I recommend, like I said, I just found this app called Flamingo, and it literally tracks the days that you're spending outside the US. If you want to use a spreadsheet, that's fine too, but 330 days out of 365. It's called the Foreign Earned Income Exclusion, if you wanted to look it up and learn a little bit more about it. Um, so yeah. Any other live questions? I will stay here for just another minute. We've been on here for quite a while. So otherwise I'm going to sign off, and I really, really appreciate everyone joining. I hope I got to everything, all the questions. I was trying to read through everything, just trying to kind of go through everything again quickly. But yeah, hopefully I answered all the questions that were live, and I really appreciate you all being here, and I will see you next time. It is March 4th, I believe. March 4th is a Tuesday, the first Tuesday, and yeah, I just see one more question. Let's see. And how do you determine what was earned in each state? Is that based on your deposits? When was the work done that you billed for something else? That's a tough question. It depends. So I have people that are like RV techs, right? And so they're physically going into to a state and working, and so that I do actually require them to track that income earned in that state. As far as if you're like just a digital, business owner and working online, yeah, it's income that's coming in during that period. So like we're at February 4th, let's say you entered Colorado. Okay, just picking a state because we were talking about it earlier, and you enter that like February 1st. So any income earned February 1st to whenever you leave. So let's say you leave February 27th. So for those days, would be Colorado-based income. And generally speaking, you're not a resident. I wouldn't expect someone like that to pay taxes to Colorado. Um, and if you're a high income earner, you may hit the thresholds, but you're not a resident. So you're gonna, yeah, that's why I work with my individual clients to kind of go through that. But generally speaking, yeah. I will be okay. So yes, thank you guys for joining me. I really appreciate it. I'm gonna take one more question. The foreign tax exclusion apply only earnings in a foreign country. That is not correct. So foreign earned income exclusion has a physical presence test. So if you are outside the United States, so there's two pieces to it. So you can be a bona fide residence or physical presence. I'm talking about doing physical presence test, which is 330 out of 365 days. So that is what I'm talking about. It's not foreign earned income. I mean, it's not income earned from a foreign entity. It's the physical presence test that you were outside the US, not earning that money in the US. Okay. Um, there is a separate credit called the foreign tax credit, and that is a tax credit when you pay to another country. So let's say you spent time in Australia and you owe them a taxes. You pay taxes to Australia, you get a direct credit on your US tax return. So those are the two options as far as foreign tax credits or exclusions from income. So I hope that helps answer that. I look forward to getting your emails, and I thank you all for joining me. I am going to jump off. This is busy season for me, and I really appreciate all this great interaction and feedback and questions live. So I will see you in March, and have a great month.